Welcome to The Explainer. Today, we're going to talk about a simple accounting tool that can honestly mean the difference between chaos and control for a growing business. It's called a control account, and it might just be the secret weapon for financial clarity you've been looking for.
So, let's set the scene. Your business is doing great. Sales are up, customers are rolling in, things are really taking off. But behind the curtain, you've got this nagging feeling that your books are turning into a complete and utter mess. Sound familiar?
This is such a classic growing pain. What starts out as a totally manageable system can just spiral into a massive headache that makes it pretty much impossible to get a clear, simple picture of your company's financial health.
Think about it. When you first got started, you probably had, a handful of customers? 10 maybe? It was easy. You knew exactly who owed you money, you knew who you had to pay. It was all probably on a single spreadsheet, right? No problem.
But then, boom, you hit 100 customers. And all of a sudden, you're not just tracking a few invoices. Now you're juggling 100 different accounts. It's getting a little more complicated, but you're hanging in there. You've got this.
And then before you know it, you're drowning in thousands of individual transactions. You've got invoices flying out, payments trickling in, a few returns here, some credit notes there. Trying to figure out where you stand by adding up every single one of those, it's not just a huge waste of time, it's almost impossible. There has to be a better way, right?
Well, good news. There is a much, much better way. In fact, accountants figured this out a long time ago with a concept that is just brilliantly simple. So let's meet the hero of our story, the control account.
So what on earth is it? Okay, put simply, a control account is a summary account. Think of it like a master dashboard for one whole area of your business. So instead of digging through 1,000 little details, you get one single, powerful number that tells you the big picture story at a glance.
Now, you might hear it called a few different things. Some people say total accounts or self-balancing ledgers, but the name that I think really makes it click is a mirror account. Why? Because it perfectly mirrors the grand total of all the little individual accounts it's supposed to be tracking.
Okay, so to keep things nice and tidy, these dashboards are usually split into two main buckets. And these buckets answer the two most important questions in any business. Who owes us money and who do we owe money to? So on one side, you have your sales ledger control account. This is your money in dashboard. It gives you that one magic number for the total amount all your customers owe you. In accounting speak, that's your trade receivables. Then on the other side, you've got the purchases ledger control account. You guessed it, this is your money out dashboard. It sums up everything you owe to all your suppliers, your trade payables. It's just a super clean way to see both sides of the story. But look, this is about way more than just having neat and tidy books. Putting control accounts in place gives your business some actual superpowers. Let's break down what they are.
Okay, first off, you can spot errors in a snap. If your books don't balance, you immediately know if the problem is in your sales ledger or your purchases ledger. No more hunting through thousands of entries for one typo. Second, it's a huge deterrent for fraud. Because the big summary accounts are kept separate from the individual detailed accounts, it's much harder for any shady business to go unnoticed. And third, and maybe most importantly, you make smarter decisions faster. You always have a quick, accurate snapshot of your money in and money out, which is absolutely critical for managing your cash flow.
Now, having a cool dashboard is great and all, but how do you know you can actually trust the numbers you're seeing? Well, that brings us to the most crucial step in this whole system, the reconciliation, or as I like to call it, the all-important double check.
So let's run through a quick example. Imagine you open up your books and you look at your sales ledger control account. That's the big dashboard for all the money your customers owe you.
And it shows you a grand total of $10,500. It's a nice clean number. But is it right? How can you be 100% sure that this big summary number actually reflects reality?
You prove it by doing that double check, that reconciliation. You just go to the detailed list of every single one of your individual customer accounts and you add them up. So Adiyadi & Co. owes $3,000, JKO Ltd. owes $4,500. You go right down the list. And when you add it all up, what do you get? Exactly $10,500.
Checkmate. The nitty-gritty details match the big picture dashboard. Everything balances out. And that feeling, right there, is the power of this system. You have control. You have clarity. You know your numbers are solid.
So you see, this whole process really transforms your accounting. It stops being just a chore, just record keeping, and it becomes this dynamic, reliable financial hub for your entire business.
And please, do not think for a second that this is some complicated thing that's only for giant corporations. No way.
This is a fundamental, essential practice for any business that is serious about growing and wants to keep a firm grip on its finances. In fact, ignoring this stuff can be a major red flag for investors or auditors. Sources on the topic are very clear. If these reconciliations aren't being done, it could lead an auditor to decide your business has a material control weakness. And trust me, those are 3 words you really, really don't want to hear.
So it all boils down to one simple question you should ask yourself about your own business. Do you have a clear, reliable dashboard for your money, giving you the big picture at a glance? Or are you still trying to figure out where you're going by digging through a giant pile of receipts? The answer to that question could make all the difference.